Common stocks are essential elements of a typical investment portfolio, and so understanding their key attributes will help you make informed decisions as an investor. I want to examine the key attributes of a common stock you need to understand as a beginning or as an experienced investor. Number one, ownership. Ownership of common stock confers on you the ownership of the company you are owning the stock of. In other words, you become a shareholder of that particular company, and you are entitled to rights that accrues to you as a shareholder. So whatever the company makes, you are entitled to partake in whatsoever the company is able to make at the end of a given financial year. In other words, you can partake in its assets whenever these assets are being shared out, as the case may be. Number two, voting right. As a common stockholder, you have the right to vote on corporate matters, on corporate issues at the company's annual general meeting. This voting could involve ratifying the appointment of directors as members of the board of directors. It might involve ratifying the appointment of an external auditor or members of the internal auditing committee. It might equally involve, ratifying a company's desire to probably embark on mergers and acquisitions. So every key decision involving the shareholders, you have a right, you have the voting right as a stockholder, as a shareholder, in matters that concerns the company at a corporate level. Number three, dividend. As an owner of a common stock, you are entitled to the company's dividends wherever the company decides to pay dividend. It all depends on whether the company makes a profit or not, and also on whether the board of directors, the members of the board of directors are willing to declare dividends at any given point in time. So once dividends are declared, you are entitled to such benefits as a common stockholder. Number four, capital appreciation. One of the key attributes of common stock is that they do appreciate, in the future. When the company does very well, you discover that the company stocks will likely appreciate. And so once the stock appreciates, the value of your investment will equally go higher. As a result, you tend to, make profits, alongside the company's, share price appreciating. Number five, liquidity. Investment in common stocks, is very, very important in the sense that you can very easily buy, you can very easily sell your investment. In other words, if you have the needs, for cash, you could very easily enter a buy or a sell order on your stock. The stock will be sold, and then you get, your fund transferred into your bank account. So liquidity is very, very easy. It is enhanced, as a common stockholder compared to other assets that are somewhat illiquid, like assets like real estate. They're not all that liquid. But when it comes to common stock, common stocks actually present a reasonable level of liquidity. Number six, risk and return. Essentially, investment in common stock could be risky. There's no doubt about that. We should not look at the risk. We should equally look at what the return. The returns are there, in the form of capital appreciation, in the form of, investment growth, compounding of your investment. These are, the returns attached to a typical, common stock, holding. But that should not discourage you. Concentrate on the return. The return is always there. When the company performs fine, you will do fine. When the company performs poorly, unfortunately, there's a likelihood your investment could go down. But that shouldn't be a factor why you should not, invest in the market. Number seven, residual claim. Normally, from time to time, companies tend to go bankrupt for one reason or the other. So in the case of liquidation, if a company is liquidated, the common stockholder is entitled to the residual value of the company's assets after preferred stockholders and bondholders had been paid off. So when they are settled, when they've been paid off, whatever remains, goes to the common stock holders. You are entitled to, you have a residual claim on the assets of the company in the event of liquidation. Number 8, price volatility. The market actually can be volatile, and the stocks, therein could equally, could fluctuate widely. That's a common attribute you must bear in mind as a common stockholder, as a shareholder of a company. Your investment, are bound to fluctuate, but that should not get you discouraged. It's what you should expect to have as an investor. That those paper losses should not bother or trouble you. It's what we should expect. After all, they are just mere paper losses. You've not really actualize the loss by selling the share. As long as you don't sell the shares, they are merely considered as paper losses, and eventually, all things being equal, the stocks are bound to appreciate, as time goes on. Number 9, growth potentials. Our common stocks actually have a potential for growth. Some companies' shares can grow, at an above average rate. We call them growth stocks. And so these common stocks have a potential to grow, which we should have at the back of our mind, so that should, in case there's a fluctuation in the market, we shouldn't forget the fact that all things being equal, in the near future, this stock, these particular shares we are holding, these common stocks we are holding, is bound to grow, and that particular knowledge and belief, will help us to hold on to our holdings, hold on to our investment without selling prematurely. I would like you to click the notification button and subscribe to this channel, so that I can bring contents of this nature to you, in the near future. Number 10, information disclosure. As a matter of law, as a matter of policy, companies are expected to disclose information to their common stockholders, information relating to events like, holding an AGM, like important announcement like, the date of an AGM, announcement concerning mergers and acquisition, and even the regular quarterly reports, returns the company brings out. All this information are to be disclosed to the shareholders. And whenever there is a general meeting, another general meetings, the common stockholders are expected to ask questions, and then the directors concerned, or the chairman, as the case may be, will answer the questions appropriately. And by so doing, that particular idea of disclosure is there. Nothing is hidden, or nothing should be hidden from the shareholders of the company. So these are the key attributes of a common stock that we need to understand, so that with this knowledge intact, we have we stand a better chance of investing with the accompanying knowledge. And with that knowledge, we'll be able to make the right choice. And with the right choice we're making, of course, we'll end up having a better return in the market as common stock holders.